everyone, this is the fifth video in our discussion of the concept of income. In this video, we will discuss the accounting for farming business and the hybrid accounting. So what is a farming business? A farming business embraces the farm in ordinary accepted sense and includes stock, dairy, poultry, fruit and truck farms, also plantations, ranches, and all lands used for farming operations. A farmer may be an individual or partnership or corporation that cultivates, operates, or manages farms for gain or profit, either as owner or tenant. Income from farming business may come from different sources. Okay, so there are three. So first, from the selling of farm products raised, such as those which are grown, cultivated, and harvested by the farmer. For example, if the farmer is engaged in a palay or rice business, rice farming, then the harvest and the sale of those farm products shall be considered as his revenue. Second, trading farm products purchased. These are those which are bought, cultivated, and harvested by the farmer. For example, if the farmer is engaged in having a pond, or let's say, for example, a stock or dairy, then any product purchased and cultivated and harvested are also a source of revenue. And last will be trading of other farm products and byproducts. So there are some instances wherein the primary product would produce a byproduct. For example, when the farmer is engaged in palay farming or rice farming, the rice husks, which are considered as byproducts, can still be sold for a minimum fair or minimum value. Okay? So how do we compute the taxable income of a farming business? So one may choose using the following methods. There are three methods used in farming in accounting for farming business. Number one is the cash basis. Second, we have the accrual basis. And the third, we have the crop basis. So take note that the cash basis and accrual basis have been discussed already in our previous videos. So in this video, we will focus more on the crop basis as accounting method for farming business. The crop basis for farming business is applicable only to farmers engaged in the production of crops which take more than a year, from the time of planting to the process of gathering and disposal, such as those engaged in log or wood production. So since in the making of wood or log, so it will take more than a year. Usually it will take 5 to 7 years. Expenses paid or incurred are deductible only in the year the gross income from sale of the crops are realized. So it is only upon such time or the year when there is a sale from the production when we will recognize expenses, whether paid or incurred. So, for example, Artemco is engaged in log production and log processing. It normally grows trees, and after several years, usually 7 to 8 years, it harvests the logs from the trees planted. After cutting the trees, it replenishes the cut trees by planting new ones, while processing the logs into several wood products. Okay, some logs are not processed and are sold directly to buyers, usually outside the province, while some undergo manufacturing to make more useful products. Wastes from production are normally salvaged at a lower price, so there is a byproduct. For the year 2020, Artemco revealed the following data. So Artemco had a sales of logs directly to buyers. Not these are the logs which do not undergo process. So 1.5 million. And we have also the processed products, the wood products, for 3 million. And of course, the wastes and byproducts, we have 700,000. It also have expenses paid and incurred in the year 2017 and 2018, 2019, and the cost of processing logs in 2020. So take note that these expenses from year 2017 to the current year are never yet reported in in its income tax return because there was no harvest yet. So for the year 2020, when there was a harvest and processing and sale of the logs or products, then that would be the time when our TEMCO, the taxpayer, will deduct these expenses and costs. Okay? So our solution for this problem would be the sale of logs directly to buyers, that's 1.5 million, the wood products, and the waste and byproducts of 700, we have total revenue of 5.2 million. So this is our total revenue. And we will deduct the expenses and costs from 2017 to 2020 this year, a total of 1,090,000 pesos. So take note that the expenses and the costs were not yet deducted in the previous year. They were never reported as expenses, and only until such time that there is a sale that these expenses are reported against or deducted against the total revenue. So net income in 2020 we have 4,110,000 pesos. So this is what crop basis is all about. You just have to defer to accumulate all expenses incurred and paid in the previous year and deduct these expenses in the year when there is a sale. Okay? So now let's go to hybrid accounting. A hybrid accounting is one which uses two or more accounting methods as discussed previously in computing reportable income. So there are instances when the taxpayer is engaged in several businesses and that having one accounting for income tax is not sufficient. For example, if the taxpayer is engaged in as servicing business at the same time selling of goods, then it would be appropriate for him to report his income using the cash basis for the servicing business and accrual basis for the selling of goods business. Okay? So some taxpayers will have to report their income using three or four, and this is called hybrid accounting. This method is applicable for persons engaged in two or more line of business, either as part of vertical integration or diversification. Okay? So if the taxpayer is engaged in selling and distributing goods or merchandise at the same time having a logistics business, then the cash and accrual basis would be appropriate. We cannot report income using the same accounting method, especially if these methods are not applicable for the other line of business. When this method is used, incomes are appropriately reported using more relevant accounting method. And most often, hybrid accounting method involves the cash and accrual basis of accounting on different incomes. This is true particularly when the taxpayers engage in both in selling of goods and service. So there are also instances when the installment reporting is or the yes installment reporting coupled with the accrual base of accounting. For example, if the taxpayer is engaged in selling of goods in which collection is made only in 1 year, then that would be accrual basis. But at the same time, if he sells goods or properties for more than a year, or the collection period exceeds more than a year, then installment reporting would be more appropriate. Okay? So I hope you learned a lot from this video, and please watch the next video on accounting periods. Thank you for watching.